Good afternoon, everybody. Thank you for joining us. This is part two of a short series we've been running this week on opportunities in minor metals post-Covid-19. We're just going to hold for a couple more seconds as people coming in from the waiting room. So we'll just wait for a few more people to join us and for the numbers to stabilise, and then we'll get going. Okay, it looks like the numbers have stabilised a bit. So if you've just joined us, again, thank you very much for joining. This is part two of a short series we've been running this week around minor metals and opportunities for growth in some of the minor metals markets post-Covid-19. As I said, it's part two, so I hope you were able to listen in yesterday. We had a really interesting panel discussion with Cristina and Eva and some really interesting speakers from the industry as well. If you weren't able to catch that, the recording will soon be available on demand, so you can catch up and listen back to that. My name is Charlotte Radford. I'm one of the editors at Fastmarkets based in London. There's a quick disclaimer here. As I said, you'll be able to read this in more detail a bit later if you wish. The webinar today is going to last around 45 minutes to 1 hour, and the slides will all be available on demand at a later date. We'll circulate those with everybody who's listening in and everybody who registered. So anything you missed, you'll be able to catch up on. Anyway, so to start off, I'd like to introduce my fellow speakers. Of course, you may have heard from them yesterday already, but Cristina Belda is one of our price reporters. She has a particular focus on the minor metals markets. She's been working here at Fastmarkets for the last couple of years. She's an experienced financial journalist, and she has a real skill in placing what are quite niche and technical markets into the broader economic and global context. She's really great as we navigate through COVID-19. It's particularly valuable while we look at global trade at the moment. We've also got Manthey on the line, who priced minor metals for quite a number of years at Fastmarkets before she moved on to covering the noble alloys, things like vanadium and tungsten. Over the past few months as well, she's been looking at the tantalum market, really interesting as we've gone through various lockdowns in part of Africa. And within that, she's been looking at the potential for Fastmarkets as a price reporting agency to launch new reference prices and bring greater transparency to tantalum. And that's one of the case studies that we're going to go through a little bit later as well. For myself, as I said, my name is Charlotte Radford. I'm the editor for our European minor metals, ores and ferroalloys coverage. I'm based in London. Within that, I price the cobalt market, so interesting in the context of 5G, one of the areas that we're going to be focusing on a little bit later. But today we'll more be looking at some of the other minor metals, things like antimony, indium and tantalum, as I said. I'm very interested in the role that a price reporting agency can play in bringing transparency to some of these more opaque markets. And aligned with that, one of the things we've been doing recently, some of you might be familiar, so we actually undertook an industry-wide survey about minor metals, trying to bring, again, a bit of clarity over what COVID-19 means for these markets and what might be the opportunities for growth in these markets longer term as well. So we'll move straight into that. The other things we'll be looking at today, just setting a bit of context, how have some of the minor metals markets prices moved so far in response to COVID-19. We'll be trying to put those into the macroeconomic context and see where some of these smaller markets can behave quite differently to other things like LME traded commodities and other markets. We'll then look at kind of a short-term outlook for minor metals. How will minor metals fare next over Q3 and into the rest of 2020? There, our case studies are going to be antimony and tantalum, and we'll also delve in a bit to the potential for supply chain diversification, one of the potentially longer term outcomes of coronavirus. And then lastly, we'll look at the areas for growth more in the long term. So looking ahead to 2021 or 2022, we'll talk a bit about 5G and technology, and we'll also be relating back to the panel discussion that Eva and Cristina hosted yesterday and some of the key takeaways. This is also, and it's an interactive webinar, so there's a function on Zoom. I'm sure everyone's become very familiar with Zoom over the last few months, but there's a function here for Q&A. So if you want to send us any questions, we'll be able to see those. We'll try and answer as many as we can. We'll either answer them if it's relevant for what we're discussing at the moment, or there'll be a more dedicated Q&A session towards the end. If we run out of time, as I said, we've got around 45 minutes for this today. If we run out of time, we'll get back to people individually, or maybe we don't quite have the right experts on the line, but we'll get back to you separately, or write up all of the answers to the different questions that we've been receiving today. We'll also be undertaking polls as well, but we'll talk through how that works when we get to them. So without any further ado, let's set the scene. So that survey that we were carrying out over the course of May and early June, one of the first questions we asked people was, how has COVID-19 affected your business? People could pick multiple options here, but you can certainly see the prevailing sentiment. So more than 60% of the people who responded to our survey saying they'd experienced some kind of delays or logistical difficulties as a result of the coronavirus. Also more than 50% of people flagging weaker demand, and quite a considerable number seeing cancelled or postponed orders as a result of COVID. I think that probably makes sense. I think that's quite a logical outcome to see here, as those sort of the prevailing ideas, thinking about border closures, quarantines, port closures, state mandated lockdowns in some cases, and lots of impact on industrial activity. But they're also quite conflicting ideas, I suppose, as well, aren't they, Cristina and Eva? I'm interested to hear from you. How has that manifested itself into physical trade? Eva, shall we come to you first? I think we've got the example of manganese flakes.
Yeah, sure. Thanks, Charlotte. Actually, manganese flakes are an interesting example because we saw prices moving up really quickly at the end of January, beginning of February, during the peak of the virus in China. And you can see here on the graph, prices rose up to 2,300 per ton in mid-February, and that was mostly supply driven. So as China shut down, there was no material coming out from there, no shipments coming to Europe, and inventories were falling here. So prices shoot up pretty quickly, but as soon as those shipments resumed, we saw prices falling down at the same speed. So now actually the market is trading at the same level as before the pandemic.
Mute. Sorry, I was just on mute. So yeah, interesting, and similar to the results from our survey, I suppose. Near term, there was a lot of tightness. People were working with very limited stocks, but then more recently, as this has gone on, people are more concerned about their end user demand. And we had Susanna Lippman from Lippman Walton on our panel yesterday, and she mentioned moly metal, obviously heavily dependent on China, and it showed a similar price trend and a really swift rally, and then quite a sharp decline as well. Have you seen that in other markets as well, Eva, other markets that you cover?
Yeah, actually there was a similar trend in ferrotungsten, which is a market I cover as well. So if we looked at the graph, you would see the same trend, prices moving up at the end of January. They moved up to a 2-year high, actually at one point in mid-February, and as soon as the shipments resumed and material was coming into Europe, we saw prices falling down. And actually they have the same application, manganese flakes and ferrotungsten. They both used in steel industry. So as demand is really bad right now in Europe for those applications, the market is trading for ferrotungsten as well at really low levels right now.
Thank you. Cristina, I think, do you have the example? Yeah, bismuth is an example as well where something similar has been happening.
Yeah, bismuth is an example of a metal that didn't react at the same speed or with the same intensity, and this is a reflect of many minor metals. And of course, the price was subjected to some volatility as every commodity with the coronavirus, but because the prices were at historical low levels, the market didn't, the price didn't drop that much because there wasn't room for further decreases. It's the case of bismuth, but it happens also with other metals as indium. Also, let's remember that bismuth was already hit by US tariffs since 2018. Last year, already some producers tried to reduce their exposure on this metal. Some producers had to close their lines last year. I'm thinking about Jin1. So all in all, it wasn't that bad for market participants. There was a decrease on demand, and certainly the market is oversupply. Of course, also because we have the Fania material that hasn't been all sold. But yeah, I was speaking to some traders and they told me if this happened 2 years ago, the market will be at the worst, it will be devastating. It was devastating, for instance, in 2018, in 2008, when the crisis happened, that prices went 50% down. It wasn't the case this time, but because of the market was very low already.
Sure, so it's just not the scope to see the same scale of declines at the moment. Thank you for that. I thought it would be interesting to put some of the minor metals in the context of other commodity moves. So you can see here on this graph the red line and the orange line, they're lead and zinc. But the pink line, as Eva was explaining, manganese flakes really shooting up, seeing a very impressive rally just as COVID was really starting to take hold in February and March. So kind of in direct contrast to what was going on in some of these other markets. Antimony, that's the blue line there. You can see gained a bit of support, but not so much of a pronounced strike, but still behaving differently to some of the more exchange traded or more liquid commodities. And germanium, again, proving relatively steady. So I suppose what's interesting from what Cristina was saying, what Eva was saying, the minor metals aren't proving completely immune from these macroeconomic pressures and the fact that the economies are slowing down and in some cases are completely on hold, but they're not so immediately sensitive to that, unlike the base complex. And even there I've got the example of Brent crude, which has come under considerable pressure as well. The supply is pretty good for these minor metals, but they're actually far more responsive to sort of nearby supply concerns that can be created from logistical interruptions and even a slowdown in the actual production or availability themselves. But as a result of the trade war, nobody's really wanted to hold any more than they possibly have to. Cristina, I think you're going to talk about this a bit later, but these just-in-time deliveries have really been the priority for everybody. So there hasn't been a sort of buffer stock for some of the consumers to be working from. And it's really a question of how do you get the material in the right place at the right time. And sometimes, like we've seen for manganese and to some extent in antimony, that means you have to pay a premium to have that material, even when the rest of the global economy is starting to come under pressure. So I think that brings us on quite nicely to our next section, how will the minor metals fare next? And we're going to talk about supply diversification there. Of course, where metals are completely dependent on one region, they're going to be more subject to those potential disruptions, and the impact is going to be more and more pronounced. But before we move on to that, we're just going to do a quick poll. So the way this will work, you can see a question there, and then something will pop up on your screen in front of you, and you'll have a number of different answers to pick from. So the question we've got here, how do you expect the minor metals to trend between now and the end of Q3? So we're almost into July, so almost into Q3 and then up until the end of September. And there are 5 options there, so we're just going to give a few seconds to get some answers in, but ranging from a sharply negative trend, thinking about the minor metals complex as a whole, slightly negative, flat, slightly stronger and sharply stronger. So we'll just wait for a few more responses. Obviously, as we've seen so far, case studies where things have gone up in the immediate aftermath of COVID-19 spreading, but after that coming under a bit more pressure. So a bit of a mix there around the middle kind of range. Will trade broadly flat, slight preference towards a slightly stronger market over the next 3 months or so. Eva, what do you make of that as potentially a slight increase in minor metals prices?
I think it makes sense in the context of what Cristina was saying earlier as well, as we are seeing minor metals trading at really low levels for a long time from last year actually, and we've been in an industrial recession for some time now. So there's no room actually for prices to go any lower. So it makes sense that prices will go up as the world is opening up slowly and manufacturing will restart. So yeah, I think we're gonna see slightly higher prices.
And in a lot of markets, not just in these minor metals that we're talking about here, but in cobalt, other examples in the ferroalloys as well. But consumers have been really reluctant to stock up and take any more materials. So perhaps when industry starts to open up again, they'll be sitting on quite low stock as well and need to come into the market. Okay, that's really interesting. Thanks very much for your feedback on that, everybody listening in who voted. We did ask something similar in our as well. I've just selected a couple of interesting comments that we had on the top. Something quite relatively positive, I suppose, similar to what Eva was saying. The market has been under quite a bit of pressure, and as economies start moving again and as industry starts going, prices will continue to move up. That was something that had started at the beginning of the year, and I think for 2020 the outlook was reasonably optimistic. On the other hand, and really this is just sort of to demonstrate the level of uncertainty there is in the market at the moment. On the other hand, people again acknowledging that minor metals prices are generally quite low, but the coronavirus now is expected to have quite profound economic consequences, and maybe that has an impact on spending and ultimate consumer demand, and that has a knock-on effect on minor metals prices, so potentially leaving the door open to some further softening. I think interesting in that poll that we saw, there wasn't really a huge sentiment of prices either falling quite dramatically or increasing quite dramatically either. It was more a sort of slight increase or slight decline rather than anything too dramatic, which is similar to what Eva and Cristina have noted. So looking ahead to Q3, another question from our survey, what will be the biggest challenge faced by the minor metals trade and supply over the next quarter? Quite a resounding majority here, 60% of people identifying the biggest challenge as being reduced demand. Separately from that, we also asked people which metals had the most potential upside, and we saw quite a lot of optimism around some of the electronic metals, but less so for things like antimony, where there didn't seem to be any real tightness of supply coming through. Cristina, shall we come to you for a bit of a case study on antimony?
Mm-hmm. Yeah, I wasn't really surprised that antimony was one of the low-ranked metals. The situation before the pandemic wasn't great. The market was weak, and even though the market found some support because of the logistic constraints and the supply constraints at the beginning of the pandemic, because most of the material comes from China, this was only temporarily, and what we face now, it's the reduction in demand in Europe and elsewhere. The demand for antimony has been decreasing, both metallurgical and non-metallurgical demand. It's also related to construction and automotive, so that side it's weak, but also for flame retardants, even though the market it's firm, less volumes are needed. So as a consequence, price has been declining, and actually it could be close to the bottom right now, market participants told me, and it's a critical point for antimony, because some of the producers in China are not making big margins or any margin at all at current prices, and some of them have been told that they have to close some smelters. So it's a difficult situation for antimony at the moment.
Okay, so I guess in terms of sort of meaningful demand, maybe nothing particularly new on the horizon, and those traditional end uses, they're not looking too optimistic at the moment either. What about supply? Is there diversity of supply in antimony that means it's also quite ample and there's not really any particular restriction in availability on the horizon?
Yeah, supply, the market is well supplied. Most of the material, almost 80%, comes from China. That doesn't mean there aren't other options. There are other options for traders, for consumers. I'm thinking about Vietnam or even other countries in South America. The problem is that it's not easy to compete with China for these countries. It's not always competitive to find material from other origins, and also the supply is not that constant. So there is enough supply. China dominates the supply. And there is another point that's interesting, and it's about the antimony ore, the raw material for the metal. In this case, China it's importing it increasingly from Russia or from Tajikistan. Last year, China imported very big volumes from Russia, and this also caused oversupply. What we are seeing now with the coronavirus is that Russia is not that willing to sell the antimony ores. Other projects also from Tajikistan that were supposed to add more material, like Talco project, they are delayed. Polius in Russia, they are selling no antimony ores for the first quarter. So this also puts the producers in a difficult position, because they have less raw material coming, and also they have consumer pushing for lower prices. So it's a delicate situation at the moment.
Very interesting. Thank you very much, Cristina. Eva, let's come to you. Let's talk about the tantalum market. Interesting there, as I mentioned earlier, the market's heavily dependent on Central Africa. So I imagine there's been quite a profound impact on tantalum as a result of that.
Yeah, sure. So actually we saw tantalum prices moving up quickly at the beginning of April when Central Africa went into lockdown. And tantalum concentrate is supplied 80% from it comes from that region. So we saw a huge effect on prices. They moved up quickly to the highest level they've been trading at since the beginning of the year, as shipments stopped. But it's a different situation with tantalum as well to manganese flakes or ferrotungsten, like I was talking about, because prices are still trading at the same level now, as at the high numbers, because demand side is quite good, and tantalum is used in consumer electronics and capacitors, so the outlook for demand is quite strong. So we're seeing prices still supported at those levels.
Interesting, thanks Eva. And we don't historically price tantalum, do we? But we have a price assessment that we're researching at the moment.
Yes, it's something I've been looking at the past few months, and we're currently doing a consultation on launching a price, which hopefully will officially start on July 24th.
Great, really good. We spoke about, or you spoke about tantalum quite a bit during the panel yesterday, didn't you? We had a speaker really experienced in that area. Here's a quote in front of us here from that panel. What do you make of the outlook for tantalum? Can it hold on to these gains that it's made over the last month or so?
So it depends on the demand side. If we're gonna see strong demand coming quickly from the consumer electronic side and from 5G, like we were discussing yesterday, it's still some time off until we see 5G being developed all across the world. So in the short term, probably not. It's not going to be supported, but longer term view, we think it's going to be stronger demand.
Sure. And the availability has really been restricted by various lockdowns across Africa, and I suppose that things are running a bit more smoothly at the moment, but the outlook where the virus is still spreading is always going to be a bit uncertain there. It's potentially going to be prone to further lockdowns, so I guess that's not off the cards either, is it?
Yeah, exactly.
Okay, thanks for those two case studies. We'll move back to our survey. We also asked people about supply chain diversification, asking whether or not, or what the various different impacts had been on supply chains. On the whole here, you can see the results, but on the whole, people not highlighting limited raw material supply. Looks like the availability in theory is still there. Most people saying that they have seen some sort of impact. The most significant thing there being the delayed shipments and deliveries. I think that was particularly pronounced early on during the pandemic, over maybe late February and March. But also people seeing increased logistics costs and limited diversity in supply. I think, as Eva said, that's particularly prevalent for tantalum. Cristina, should we come back to you? Can you speak to us a bit about the efforts people have taken to diversify their supply chains, but in the other minor metals, perhaps the scope for that to happen long term? Some of the markets you cover are highly dependent on China, aren't they?
Yeah, exactly. Thank you. Yeah, the coronavirus has highlighted one more time the over dependencies in certain regions in China. Concretely, this is something that was already a concern. That's something that the trade war started, the conversation about diversification of supply chain, and this could be a catalyst for change on paper, but this is true that it depends on the market. It's possible, as I was mentioning before, for some metals relatively, as antimony or bismuth, is not that easy for other metals such as manganese flakes, who relies almost 99% on China, even though there is some production in Africa. Also for electronic metals, gallium, germanium, that also are key metals for countries such as US, or you cannot find the material in other countries, but China really. So it's something that especially consumers are talking about more than traders. They want to diversify their sources. But right now, the main priority is to navigate the lack of demand due to coronavirus. Yeah, also finance, all related to finance for traders. So it's not something that urgent. The minor metals are focused on the slump in demand, and at the end of the day, the supply chain has to be competitive. So if China is still competitive for them, maybe they don't have that big incentives to change it at the moment.
Okay, so maybe the sort of diversification is something that happens longer term, but the weak demand is something that's more pressing at the moment. Thank you. Okay, so a lot of uncertainty now and probably over Q3 as well. The viruses continue to spread and hit industry, and there's still various lockdowns and things. So we'll move on and think a little bit further into the future. We focused a lot on supply as well, so I thought we could look at some of the end user segments. So at this point in our survey, we asked which end user segments had the greatest potential for growth in minor metals usage post COVID-19. Again, here, like one or two of the questions we had earlier on, people could pick three options, I think, and overwhelming majority here, I think, really strongly in favour of 5G and its infrastructure, possibly benefiting the most from or having the best impact for minor metals usage. 80% of people seeing that as being quite supportive. Consumer electronics also coming out quite strongly, and of course they're linked. Things like smartphones will all be hooked up to a 5G network in theory. We also asked a separate question here around stimulus spending, and we asked which which segments would likely benefit from government spending and stimulus measures aimed to get economies back up and running after COVID-19, and 5G came out really strongly there. I think just over 60% of people saying that 5G was likely to be the key beneficiary of that sort of spending. So with 5G in mind, Cristina, let's come to you again. Can you just talk us through what are the key minor metals that are likely to benefit from the development of 5G?
Yeah. 5G, it's set to growth. This year, actually, 2020 was supposed to be like the very, very strong year for the deploy of 5G. In fact, the global profit from 5G network infrastructure is forecast to be 4.2 billion only in 2020. So I'm not surprised why market participants expect a big growth. And at the same time, the coronavirus has sort of accelerated, put on the table the necessity. And also we have seen that the 5G, it's been used also for healthcare, to support healthcare applications, to monitor use temperatures. Also in China, it has been used for robots, for drones, to eliminate human-to-human contact when delivering things. So there are a lot of areas of growth. Talking about the specific metals, gallium nitride, semiconductors for radio frequency, for instance, or germanium for new fiber optic networks. I'm thinking about indium lasers for data centers to process larger amounts of data. That's something that it's very needed. But when we talk about an increase in the demand for raw materials, we are not necessarily translated into higher price. And the main reason is that these markets are very well supplied. As you might already know, they are some of them are oversupply. And also not long ago, in January, the FANIA material was finally liquidated, but this material hasn't been yet absorbed by the market. So when we look at the demand for minor metals, we need to take a closer look even in supply to see the fundamentals, and the fundamentals are not yet great. Maybe some of the demand will come in the second half of 2020. That's what big high-tech companies, Samsung, Huawei, or Apple are thinking. They put in all the efforts on 5G devices and so on. But as the panelists say yesterday, it's not that evident a spike in demand.
And like you said, 2020 was always sort of billed as the year for 5G to get up and running and start developing, and it is hugely transformative, but it's not an idea that's brand new and has just appeared out of coronavirus. It was sort of there. It's on hold a bit as a result of everything that's going on globally at the moment, and maybe, like our poll suggests, it's a key beneficiary of stimulus spending, but it's not sort of a new idea in itself. One more question we asked, and Eva, maybe we can come to you for your comment. We asked specifically in relation to the display industry, which areas had the greatest potential for growth post-COVID-19, and wearables, the wearable markets, or wearable tech, smartwatches and things, and mobiles, consumer electronics coming through quite strongly there. So Eva, what does this technical development with 5G and consumer electronics, what does that actually look like for a consumer? Can you talk through these results? Does that sort of seem quite sensible to you?
Yeah, sure. It's something we discussed actually yesterday during the panel as well. So as Cristina said, 5G will bring new opportunities and new applications, which are expected in the longer run to increase demand for some of the minor metals. And the new applications we're talking about, it's security and surveillance, smart home appliances, as more and more people will be working from home, something we talked about yesterday as well. Electric vehicle features as well, like touch screens, healthcare technologies, what Cristina mentions, including smartwatches and medical equipment. And all these new applications they will come in with the rollout of 5G, and they expected to increase consumption for indium tin oxide, which is used in LED flat panel displays and touch screens. And the touch screens, they will appear on everything from EV dashboards to smartwatches and smart home appliances.
Thanks, Eva. And I've just moved the slides on. Hopefully you can see there was quite an interesting discussion around 5G during the panel yesterday, and everybody was quite excited about it. And as our polling has, as our survey has shown as well, it's one of those key areas for potential investment and areas for growth and increased demand for minor metals. But while everyone's very keen on it, like Cristina said, it didn't seem like a huge optimism around price direction and minor metals prices gaining from all of these growing applications. What do you make of that? Do you think from your other conversations that you have in the market, are people seeing sort of a real upswing in minor metals prices as a result of 5G, or is it quite moderate, like our panel was suggesting? Cristina, why don't we come to you?
Yeah, it seems quite moderated. There are several factors in place, not only demand. We also have to look at the stimulus from China, and China has been very keen on investing in 5G infrastructure, even like aggressively to be the market leader. So we have to see also how the stimulus work, and market participants are also looking at that very closely.
Thank you, Eva. What did you make of that discussion within the panel yesterday?
I think what we have to remember as well about 5G is something that will not happen anytime soon, probably, and it won't increase demand for all these minor metals immediately. And like Cristina is saying, consumer demand is still lagging behind. Smartphone shipments are expected to fall this year as well, so that all translate to weaker demand for electronic metals as well.
Okay. Thanks very much. We've got a question that's come in around the titanium market. It's not something that any of us on the line are familiar with pricing, but we can certainly speak a little bit around the aerospace sector. I believe we do price this in the US market though, so to the person who's asked about titanium, we can try and put you in touch with the team in the US afterwards. But as Susanna said yesterday, the aerospace market is under pressure, and a lot of the minor metals that we've discussed today, but also some that we've not gone into in much detail, are also affected or also go into aerospace, things like cobalt, rhenium. And Cristina, I know you've looked at aerospace a bit, but the industry was doing very, very well. There was a huge backlog of orders, and the consumption of miners from aerospace, I believe, was expected to be very, very consistent. What have you heard from people about aerospace more recently?
Yeah, regarding aerospace, I was expecting a bigger slump in demand, but actually rhenium traders, hafnium, or also producers, they say they had enough demand from backlog orders. Of course, there is a concern in the sector because you know the big producers, Boeing and others, have financial issues. But for the time being, demand remains sort of stable. Prices is slightly down for rhenium, some lower offers, but nothing that dramatic for the time being.
Yeah, as you mentioned, there is a good backlog of orders there in aerospace, and we'll have to see if they all get followed through with. And it's a bit like today we've been discussing supply chain diversification. There's all these sort of ideas that come to the fore when you start talking about a huge economic event, something like coronavirus, and all of these ideas about markets fundamentally changing and maybe aerospace never quite being the same again. They all kind of come to the fore now, don't they, such as these ideas of supply chain diversification, but then look back to something like 9/11, where the travel industry came under enormous pressure, but it wasn't a long-lasting impact, and everybody wanted to continue with air travel. So I suppose definitely something to keep on top of, but at the moment, like we've been discussing the whole way through of the last 45 minutes or so, a lot of uncertainty at the moment.
Yeah.
We've got a little bit of time for some more Q&A. Eva, I have another question for you, if we can go back to tantalum, if you don't mind. So we spoke about how dependent the market is on Central Africa and especially Rwanda. Have people already started to take steps to diversify and look at other sources of tantalum, or indeed actually are there other sources that people can look to as an alternative?
Actually, it's something we discussed yesterday in the panel as well. So 80% from tantalum supply comes from Central Africa. But what is interesting, when prices go up in Central Africa, some buyers look for alternative sources of material. So there is some material, 10% of material comes from South America, as well from Brazil and Bolivia. And another 10% from Australia as a byproduct of lithium mining. But it's very small volumes, and China, the biggest consumer of tantalum, they buy everything from Central Africa, also because it's easier to ship material from there. It's much quicker than South America.
Okay, no, that makes sense. So there's still sort of preference for Rwanda for familiarity and also just sort of the timing element. Okay, and the tantalum prices have been fairly elevated of late. Bit of uncertainty about whether they'll manage to hold on to those gains. The other sources, do they require those higher prices in order to make it realistic for them to be offering material?
So every time prices would go up in Central Africa, buyers would be looking elsewhere. But it's, as we discussed yesterday, it's very small volumes, and it would be like 5-10 tons of material coming from there.
Okay.
So it's still really difficult to actually have any other sources of material than Rwanda.
Yeah, okay, it's not, there's no way of sort of completely cutting your exposure to Central Africa. Okay.
Yeah, exactly.
Okay. I don't think we've got any other questions outstanding at the moment. Eva or Cristina, anything else that you sort of thought would be interesting to bring up?
Yeah, actually I have a question for you, Charlotte. As I was talking about EVs and how the touchscreens can potentially increase demand for some minor metals, but I was wondering if cobalt can benefit as well from 5G and consumer electronics.
Yeah, I think cobalt, again, like a lot of the other minor metals, 5G and the adoption and use of consumer electronics, it's kind of long been out there as one of the things that can continue to provide support to cobalt prices and cobalt market. EV is really the big one. That's where you start talking about the big volumes, and a bit like some of these other sectors, the coronavirus has kind of interrupted that EV journey that was taking place, whereby more people looking at electric vehicles in preference to alternatives. And I think like 5G 2020 was going to be the year where they became a lot more mainstream, and similarly for cobalt, that kind of story is sort of on pause for a little while now. But I think still speaking about EVs, I think the coronavirus has given a greater appreciation for clean energy and the green economy. So I think EVs are still a strong story for the cobalt market. For consumer electronics, again, potentially has been sort of interrupted by the coronavirus. We had a story on Fastmarkets, I think it was last week, whereby smartphone shipments from China were still under pressure in May. Obviously consumer confidence is low as well, so that's going to restrict people's tendency to pick up a new smart device, smartphone, other sort of iPad or anything like that in the short term. But like you were saying about people working from home, I think there's still scope for that market to grow, people setting up home offices. As 5G networks come on stream, people are going to be buying new phones that have 5G capability. And that's all going to mean demand for the batteries that go into consumer electronics, which contain cobalt. So on pause at the moment, cobalt prices haven't been rallying of late. They've sort of seen moderate support as a result of shutdowns in the DRC, a bit like tantalum has seen support. but more conservative than at the beginning of the year when cobalt prices were actually seeing quite a solid rally higher.
Great, thanks. Yeah, I guess it depends all on when the 5G rollout is actually gonna finally happen.
Absolutely, and like we found from our survey, it seems like one of the key areas that can benefit from stimulus spending. So if 5G was always going to happen, I suppose that solidifies the development even more. Okay, I don't think we have any other more questions, and it looks like we're just around about our 45-minute time. So we'll leave it there. As I mentioned at the beginning, this webinar there'll be a recording online in case you want to listen again, and you'll be able to view all the slides and things like that as well. Thank you very much indeed for joining us. If you have any other questions, please do get in touch. And just a lasting comment as well, we've sometimes covered minor metals at our International Ferroalloys Conference, which big industry event usually takes place in November each year. As a result of everything that's going on, that's now going to be a fully virtual event, but we'll try and cover some of the minors there as well. But if you'd like any other information, you can sign up there, and hopefully we can host some more webinars like these as well, and the panel discussion yesterday. So thank you very much everyone for joining us, and thank you Cristina, and thank you Eva, and hope everybody has a really nice afternoon.
Thank you.
Thanks, Charlotte.
Thank you all.